Hi friends, welcome to Rec TV. Today we are going to discuss about dissolution of partnership firm. This is the one of the topic in Group 2 or Advanced Accounting. So what is the meaning of dissolution? Here dissolution means discontinuation, and under the Partnership Act 1932, dissolution may be two, that is dissolution of partnership and dissolution of firm. Here dissolution of partnership means there is a change in the existing relationship among partners. It means here we consider one example, A, B, C are partners. There is a change between these three. This is known as dissolution of partnership. And when we come to the dissolution of firm, here dissolution of partnership between all the partners of firm along with the termination of business. Here termination means it is going to end our business. Now dissolution of partnership may occur here change due to admission, retirement, death and change in profit sharing ratio. Why may occur a change in existing relationship among partners in case of admission? Here in case of admission, A, B, C are partners. Then how there is a change? After meanwhile here D is coming into the partnership firm, so it is admission between A, B, C. Now this relationship is going to end and the new relationship is going to start, that is A, B, C and D. So there is a dissolution between A, B, C and there is a relationship rise between A, B, C and D. So there is a change between A, B, C and there is a new change between A, B, C and D. So this is the dissolution of partnership. And when we are considering example about retirement, here A, B, C are partners and B is going to retire. So in this situation A and C is going to start new relationship in new firm, that is A, B is the partners. So here when there is a admission between A, B, C, so there is a new relationship, and when there is a retirement between A, B, C, B is going to retire, so only A and C is remaining in the firm. So there is a dissolution of partnership. Likewise when there is a death also, if C is going to die now, so A, B, C relationship is going to end and there is a new relationship between A and B in the firm. So there is also a dissolution of partnership. And when we comes to the change in profit sharing ratio, here A, B, C are partners, so their profit sharing ratio is 3:2:1. After that they agreed to change their profit sharing ratio. Now they made ratio is 2:3:1. So the existing relationship between A, B, C for 3:2:1 is going to end and the new profit sharing ratio is came into the form, that is 2:3:1. So dissolution of partnership means there is a change in existing relationship among partners. So with this example we can understand dissolution of partnership among partners. So dissolution of partnership we have already seen in group 1. Now this is the new, what is dissolution of firm? Dissolution of partnership between all the partners of the firm along with the termination of business. We are going through this chapter in group 2 accounts. Here dissolution of firm may happen in two ways, that is by mutual agreement or by compulsory dissolution. In mutual agreement, the partners while entering into agreement, they agrees to dissolve the business at a certain period. So this is the mutual agreement between the partners. And by the compulsory dissolution means if the firm is going in a wrong process, the court may allow for the compulsory dissolution. So this is the example for compulsory dissolution. And on the happening of certain contingency also, the court may also dissolve the existing partnership firm. And dissolution by way of court means if the insanity of partner and the permanent incapacity of the partner and misconduct by a partner and transfer of interest by a partner, if this situation happens in the partnership firm, the court may order to discontinue the partnership firm. And by notice also we can discontinue our firm. That is, when any one of the partner gives a notice in writing to other partners in case of partnership at will. In this situation also our firm is going to discontinue. And on the happening of certain contingency means the expiry of the term for which the firm was formed. So our firm is formed for a period, that is 2 years. After 2 years there is a discontinuation of our partnership firm. This is also situation for the discontinuation of a partnership firm. And in case of a death of all partners also there is a discontinuation of partnership firm. Already we have seen that in a case of death of a partner there is a dissolution of partnership, and when all the partners dies, so there is a discontinuation of partnership firm. So this is the view about dissolution of partnership firm. Till now we have seen what is the meaning of dissolution of partnership and what is the meaning of dissolution of partnership firm. Now what are the steps in dissolution process? Let us see. Preparation of balance sheet of the firm on the date of dissolution. For example, now you are running your business from 1st April to 31st March. So you are decided to dissolve your firm on 6th June 2015. So already you have balance sheet for 31st March. So you are going to dissolve your firm on the 6th June. So you have to create a separate balance sheet between 31st March and 6th June of 2015. So this is meaning of the first point, that is preparation of balance sheet of the firm on the date of dissolution. And the second, that is non-cash assets are sold and converted into cash. It means now the firm is going to end. So you have to pay your creditors, and whatever the liabilities you have, you should clear up to the date of dissolution. Now what you are going to do means, already you have cash balance, so you don't touch it. Now what are the non-cash assets you have, like plant and machinery, furnitures, debtors? So all these are converted into cash. How you will convert is the question. So now you should transfer all the assets, that is non-cash assets only, transfer to the realization account. In that realization account you should transfer all the assets and liabilities. So when you sell assets you will earn money from that. After that you have to give your liabilities, that is creditors and bills payable, such all. And also after paying outside liabilities you should also pay partners capital. After doing this process you may get a realization profit or loss. What you will do, it means after selling all the assets and after paying all the liabilities you will earn profit or loss. This should be shared between partners at their profit sharing ratio. And the last, that is distribute the available cash to creditors and partners. So already we have this point also we have covered in second point, that after selling all the assets and you should pay to your creditors or all the liabilities such as, and also you have to pay your partners because their capital is liability to us. After that, how you settle your accounts, that is settlement of accounts. Settlement of accounts means there is two heads in this, that is treatment of losses and the application of assets. Here treatment of losses means till now whatever loss you have you should set off all those losses. From it may, how you will set off, it may out of your profits or out of your capital. If out of profits and out of capital is not enough to set off losses, the partners individually should bring cash in their profit sharing ratio. And what is the application of assets? Here application of assets means in steps in the dissolution process we have seen second point, same it here repeats, that is you have transferred all your assets to the realization account. After that when you sell any asset, so there is the income. So that income how you will pay to the liabilities? First you need to pay partners loan account and also outside debts. First we should pay outside debts like creditors, bills payable, and if any member given loan to your firm, so first you set all these liabilities. After that if any loan you have taken from your partner, also it is also liability, so you should set off next this. And latter point you should set off your capitals of the firm. So this is the process of the application of the assets. Next, we are going to see what is the treatment of firm's debt and private debt. Firm's property shall be applied first in payment of firm's debt. Then the surplus, if any, shall be applied in payment of partner's private debt. So if there is, in case of private debt, here we have three partners, A, B and C. All these partners are solvent partners. Solvent means in future if the firm is going to loss and the firm is going to dissolve. After in that situation, the firm has to give, that is has to pay their liabilities to outsiders. In that situation, the firm has no money, but all the solvent partners will bring cash in their capital sharing ratio. And in the private, why we are discussing here means in private debt, A and B, C, here the firm is in condition of a dissolution. So A, B, C, A and B were paid whatever cash they want to pay in their capital sharing ratio. After that, C is unable to pay, and C had a house, and this house in mortgage with a bank. So the value is 20 lakhs. Already C had paid 10 lakhs to the bank, so remaining 10 lakhs should be paid by the C. So in this situation, this house is going to sell at 50 lakhs. Now in this situation, what is the meaning of private debt, you will understand clearly. So after selling this house, he should pay first his debt to bank, that is 10 lakhs rupees amount he should pay from 50 lakhs. After that 40 lakhs he may use personally, that is for firm also and for personal also. So this is the difference between firm's debt and private debt. Now we are going through accounting treatment of dissolution of partnership firm. In this, we have divided our work into two segments, that is realization of assets and the settlement of liabilities, and the second one is settlement of accounts of partners. So to close various asset account, what we should do means all the asset accounts appearing in the balance sheet. So whatever the assets which are appearing in our balance sheet should be closed by transferring to the realization account by crediting them in their book values. So what is the entry means? Realization account data to land and building, to plant and machinery, to furniture and to stock account. So all these are credited in the realization account at their book values. So what is the treatment of cash and bank balance? Already we have said all the various assets should be transferred to the realization account credit side at their book values. So there will be also balance in the cash and bank balance. So why we are not transferring to the realization account? The meaning for the answer is cash and bank is already in realized form, so it is not to be converted again into cash. So already it is realized in cash form, so we are not taking into the realization account. And assets have to be transferred at gross values. So whatever assets we are taking in the realization account, it should be reflected at the gross values. It means for land and building there is a depreciation. For depreciation we may create provision, that is provision for depreciation. Likewise for debtors there is a provision for bad debts. So all these should not be considered. These should be shown separately at the liability side. So friends, this is the how you will deal with the assets in realization account. Now when you come to the liabilities, so all the liabilities also you should transfer to the realization account at the debit side at their book values. So what is the entry means? Sundry creditors account data, bills payable account data, outstanding expenses account data, bank loan account data, provision for bad debts account data, provision for depreciation account debtor, and last you should make credit to the realization account. So all the liabilities are you have transferred to the realization account by debiting in the realization account at their book values. And now you are transferred all the assets and liabilities to the realization account. After transferring to the realization account, when you sell one asset for cash, what will be the entry? The entry is cash or bank account data to realization account. Normal entry is cash or bank account data to asset account. Then what is the difference here? Why you are crediting to the realization account? Here the answer is already you have transferred all the asset to the realization account, so again you will not appear in asset in the account. That is, you should make the entry like cash account data to realization account. And when assets are taken over by any partner, so the firm is going to discontinue. So whatever the assets is there, some are you are sold and some assets are you are giving to your partner. At that time the entry will be partners capital account data, because as we are giving to the partner our asset, his capital account will decrease, so we are debiting to his account. The entry is partners capital account data to realization account. And when you are discharging outside liabilities, so when you are discharging outside liability, what is the normal entry? That is sundry creditors or whatever the liability you are going to discharge, that account will appear in the debit side. But in this situation realization account is appearing in the debit side. Why? Because already we have transferred all the liabilities to the realization account. That means liabilities will not appear separately, so you will debit to the realization account data, and the whatever cash is going from your firm, it is going to credit. So the entry is realization account data to cash and bank account. And you are sometimes you may incur some realization expenses for in the dissolution process. What is the realization expense means? For selling your assets there is some expenses, these are the realization expenses. So for that the entry is realization account data to cash and bank account. After doing all this, you may get profit or loss in realization account. And what is the treatment for profit or loss in realization account means? That profit you should share to the partners, or loss also you should share to the partners. For that the entry is realization account data to all partners capitals account. And in case of loss, all partners capital account data to realization account. And also in the balance sheet you may appear accumulated profit or losses like general reserve, investment fluctuation fund. So what we will do this for this is means general reserve account data, profit and loss account data to all partners capital account. So you should distribute these reserves, profit on sale of assets all to the partners. So the entry will be general reserve account data, profit and loss account data to partners capital account. So this is the accounting treatment for dissolution of partnership firm. Settlement of accounts of the partners. After passing all the entries, that is accounting treatment, the capital accounts of the partners show either the credit balance or debit balance. Accounting entries have to be passed for the payment by the firm to firm or payment by the partners to the firm. The procedure for closing the partners capital account will be different in each of the following cases. That is, where all the partners are solvent, and where some of the partners are solvent and some others are insolvent, and third situation is when all the partners are insolvent. Now what is the accounting treatment in case of all the partners are solvent? So in this, where all the partners are solvent, any loan taken by the firm has to be paid. It means whatever loan has been taken by the firm, it should be paid to them. That is partners loan account data. So our loan is discharging. So we are debiting to the partners loan account data to cash or bank account. If a partner has taken loan from the firm, it means you are the partner of the firm, you have taken loan from your firm. At that time, he is required to bring in amount of cash to the business. So you have to go through cash to the firm. So at that time, what is the entry means? Cash or bank account data to partners loan account. On the balancing of partners capital account, if it shows the debit balance, it represents the money is to be paid by the partner into the firm. The partner shall bring in money required to make up his deficiency, and the final payment is made to partners having credit balance in the partners account. That is partners capital account data to cash and bank account. And in the second case, where some of the partners are solvent and some others are insolvent, what is the treatment here? At the time of dissolution of firm, the capital accounts of partners may show debit balance after charging the realization profit and loss. If such partner is insolvent and cannot bring any amount to make good the deficiency in his account, then such deficiency has to be absorbed by the other partners. Now the important question, that is, in what ratio such loss is absorbed by the other partners. So for example, A, B, C are partners. Here in this ABC, C had become insolvent, so he can't bring any cash to the firm, whatever he want to give to the firm. At that situation, the remaining partners, that is A and B, should share his deficiency. So we said here they should share his deficiency. At what ratio they should share the partner C's deficiency by partner A and B? The answer is, the partners may agree to share such deficiency in profit sharing ratio or in the ratio of last agreed capitals. Last agreed capital means it is as decided in the Gardner-West-Murray's case. So what is the decision in Gardner-West-Murray's case? Unless otherwise agreed, the decision in the Gardner and Murray's case requires that the solvent partners should bring in cash equal to their respective share of realization loss. So if there is a applicable of Gardner-West-Murray situation, so whatever profit or loss you have got in the realization account, you should bring to the firm return back. So that should be bring in the cash. That the solvent partners should bear loss arising due to the insolvency of the partner in the ratio of last agreed capitals. So before we said in what ratio the deficiency of C should share by A and B. Here in the Gardner-West-Murray case, they should be take this ratio at last agreed capitals. In this, there is two situations. That is, in case of fixed capitals, it means whatever the capital reflecting in the balance sheet, there is no change, then we should follow capitals ratio. Whatever the ratio is lying in this capital, that ratio should share for the deficiency of other partners. And in case of fluctuating capital, last agreed capital means in fluctuating capital, after making all adjustments for past accumulated reserves, losses, drawings, interest, that is here interest, we said that what is the interest means, interest on capital or interest on drawings, remuneration of partners, etc., to the date of dissolution. So whatever is happening in the firm, you should consider all up to the dissolution of firm. So you should, here the main note, you should not consider realization profit or loss. before the dissolution you should settle all the accounts, like whatever the profit you should share, whatever the reserves you should share, whatever the losses you should share, and interest on drawings you should share. All the treatment before the dissolution you should treat it. And what are the important points to remember while applying Gardner-West-Murray rule? This rule does not apply when only two partners in the firm, because here in Gardner-West-Murray situation, if there is three partners, one partner become insolvent, other two partners is going to share his deficiency. If only there are two partners, who will share his loss? Ultimately only one partner only. For that situation, this Gardner-West-Murray rule does not apply to only when there is only two partners. And Gardner-West-Murray rule is applicable only when there is no agreement among the partners for sharing the deficiency in the capital accounts of insolvent partners. So, if there is any agreement between A, B and C for the dissolvency, that is how insolvency of partner C to share A and B, if there is no agreement, Gardner-West-Murray rule will apply. If there is any agreement, what is the agreement shows, they should follow. And the realization loss should be divided in the profit sharing ratio in usual manner. And final debit balance in insolvent partners capital account, after all the adjustment, you should share at their ratio the deficiency of other partners. A solvent partner having debit balance in capital account while checking the last agreed capitals will not share any loss due to the insolvency of a partner. So friends, in this situation we said that A, B, C are partners. Here C had become insolvent and A and B are sharing his deficiency in their last agreed capital ratios. In a case B, after doing all the adjustment before the dissolution of firm, B had also become insolvent. So although he is solvent in the outside process, that is outside he had many properties, he has a solvent, but when we are coming to the accounts, he is became insolvent as his balance shown in the capitals as a debit balance. Here in this situation, B will not share any deficiency of C. Total it should be borne by A. So this is the one of the disadvantages in a Gardner-West-Murray's rule. Last situation we have seen, that is accounting treatment of all the partners in case where all the partners are insolvent. So there is no problem in this situation because all the partners became insolvent. When all the partners are insolvent, the firm asset falls short of its liabilities and the creditors of the firm cannot be paid in full. So the available cash with the firm, that is cash in hand and final dividend received from the partner's estate, is used first for paying realization expenses. After that, it is used to give outside creditors and outside liabilities. If any excess is there, it is given to the partners. Otherwise, all that become insolvent, there is no share in the profits. The balance amount is to be paid to the creditors at the proportionately. In order to close the books of realization account is prepaid in the usual manner without transferring the liabilities to realization account. So all the liabilities are discharged to the extent of possible. Any balance unpaid is transferred to the deficiency account. Similarly, partners capital account are also closed by transferring them to the deficiency account. So friends, when all the partners are became insolvent, it means the firm has a lot of liabilities. It can't pay whatever it had. So they asked the partners to bring cash from their own estate to pay our outside liabilities. In this situation, partners said, we are also insolvent, we don't have any private estates. In that situation, what you will do means, whatever the assets in the firm you will sell. After that, whatever the private estates of the partners, if any partner is likely to give to their settlement of liabilities, you should take and you should dissolve all the liabilities. First, in the payment process, first you will pay realization expenses. After that, you should pay your creditors it proportionately, and the capital is not enough to pay outside liabilities. So whatever the balance amount is there, you should transfer to the deficiency account. And although you have no cash for the payment of outside creditors, you will not pay to your own partners also. So your own partners capital accounts also you are going to transfer to the deficiency account. So with this, before closing our dissolution of partnership firm, there is two entries. What are for the payment of liabilities in the case where all the partners are insolvent, liabilities account data to cash or bank account data to deficiency account. So here we have additionally open deficiency account. So whatever amount is unpaid, you should transfer to the deficiency account. For closing partners capital account, deficiency account data to partners capital account. So whatever the amount in the partners capital account, you are transferring to the deficiency account. So because you are unable to pay to your partners. With this, we have completed dissolution of partnership firm. In next video, we will see some problems on dissolution of partnership firm. Thank you.